Hello?
Yes, can you get me? Yes. Hello, anyone? Peter, can you get me? Alex, can you get me?
Yes, I'm able to hear you now. Saying the sales value it's 355 600.
Yes. So the sales value is 360. Hello?
I was saying the sales value is
Yes.
355 600.
Yes, 355 600, right? That's the value of the sales, like that. And then what were the units that were sold? Peter, can you help us with the number of
Uh,
units that were sold?
Uh, which was so the actual or the budgeted. The
So
actual
the
is the 28.
Yes, so the 28, these are the actual units that were sold. So what we're trying to do is we're trying to find the price per unit, right? And after we find the price per unit, and we can be able now to calculate the variance from the perspective of the price per unit. And then after we find the variance from the perspective of the price per unit, and then we multiply it by the actual units that were produced. So this minus 125. This 2 kwacha is the variance. And then what were the actual units that were sold rather? So the actual units that were sold were 2,800, right? Right? And then when we
Yes, to the 2,800.
yes. So this amount,
Hello?
yes, 2,800 times 2 gives us the variance that we're looking for, which is 5,600. But now, what type of variance is this? When we look at the nature of the variance, is it favorable or adverse? Right? When we compare the actual price and the standard price, the actual price is higher than the standard price, which means we are gaining. So it's a favorable variance, right? And what's the second variance? Second variance is the sales volume, right? Anyone? The sales volume variance, huh? Hello? Hello?
Yes, hello, I can get you.
Yes,
Yes,
I don't
perhaps
know.
it
I
is very
lost you. Alex, but Alex is not even in the meeting now. I don't know because of the network or something.
Yes, I think the network is very bad.
Yeah. Anyway, so let's continue. We just share the video when he joins or after. So now we need to calculate the sales volume variance, huh? Right? How do we calculate the sales variance? We need sales volume variance. We need to match the actual units that were sold and those units that we budgeted to sell. So what were the actual units that we sold, right? Peter, what are the actual units that we sold? Hello? Hello? Hello, Peter, can you get me? Hello, Alex, can you get me?
Able to get you.
Okay, Peter. Okay, so let's continue, Alex. So you've seen how we were able to calculate the sales price variance, right?
Yes.
So now next is the sales volume variance. So for the sales volume variance, what we need to do, we need to match the actual units and the budgeted units, and then you deduct the what? So you get the actual units, you deduct the budgeted units so that you can be able to find the variance. And then that variance you multiply it by the profit or the contribution, depending on whether the entity uses absorption costing or marginal costing, right? So in this context, this company is using absorption costing. Why? Because you can see the fixed overheads are part of the production cost, right? So we're going to multiply it by the standard profit or budgeted profit. So what were the actual units that were sold? We know the actual units that were sold are 2,800, right? And then what were the budgeted sales?
The budgeted sales were 3,000.
So these are the units that we budgeted to sell. So 3,000. And now we need to match these two to find the difference. So this amount plus that or minus that, right? It's going to give us a variance, which is in brackets signifying the fact that this variance is an adverse variance. And then what is the standard profit?
It's 15 kwacha.
So you multiply by 15 quarter, and it's going to give us the variance that we are looking for, right? So this is relatively simple information, which I'm sure you already have knowledge of, right?
Yes.
This is something that I'm sure you already aware of. So now, what's the third variance that we need to find? Right, so number 2, we are finding 3 types of variances, right? So we've been told to find the materials price, right?
Yes.
From the materials price, we also need to find the materials mix, right? And also the materials yield, right?
Mm-hmm.
Like that. So let's find the materials price first. The materials price, this is easy. This is information that we already know. How do we find the materials price variance, right? So the first thing that we need to understand is, for me, what I like doing, I like asking myself questions. The fundamental question that I need to ask myself when I'm calculating the variances for material price is this: how many units or kgs of materials were purchased? Because remember, we've got 2 types of products: there's X and Y. So we can begin with Y, X. So how many units of X were purchased?
kg.
Um,
Six 63,000 kg.
yes, so we purchased about 63,000 kgs, right?
kg.
And then for Y, we purchased about 112,800, right? So now the fundamental question that you need to ask yourself when you're calculating the variances is, we need to know the standard cost, right? Or the standard price in simple terms, right? What does this standard mean? It simply means we bought 63,000 kgs for X, 112,800 for Y. Given what we have, or given what we budgeted for, how much were these 63,000 kgs of X supposed to cost, right? That's what standard means. So we bought 63,000, right? 63,000 for X. But how much were they supposed to cost had we followed the budget that we made, right? Right? What is the material cost per unit for X, Alex?
The material cost per unit for X is 0.50.
Yes, so 0.
Kwacha.
Yes, 0.50 kwacha, right? So what we're trying to say is, okay, we purchased 63,000 units at whatever price, which we're not concerned about it now, right? But had we followed the budget, how much would we have spent, right? So we multiply the 63,000 by what? The budgeted, or rather the standard cost per unit, right? And that's how we find the total standard price. So we say 63,000, right? And then you multiply it by 0.5 like that, and it's going to give us the amount that we are looking for here, like that. But the issue at hand is, we also need to calculate the total standard price for what? For Y. We also do the same. We purchased 112,800 units, right? Which are kgs. But had we followed the budget, how much would we have spent per unit of material Y? Peter,
1.50.
1.50, right? That's how much we could have spent had we followed the budget. So this is going to give us the standard price. So it's 112,800. So this is going to be the standard price. And then you multiply it by 1.50, like that. Like that. Now the question comes in then, okay, now what were the actual costs? What were the actual prices for these materials, right? So how much was spent to buy material Y? What's the actual expenditure on material Y? Anyone?
167,000.
Why are you getting the 167,000?
It's down. They've given it down. What is the input of materials?
Okay, so that 167 is for what? X or Y?
It's for Y.
Yes, so 167,000, right? That's for Y. And then for X,
32,200.
right? 32,200, like that, right? And we need to match them against the standard. So match these two against the standard, and then it's going to give us the variance that we are looking for. So here we've got an adverse variance, and then there we've got what? A favorable variance. So like that. So this one is this one is adverse, like that. You put an A, like that. Then this one you put favorable, like that. I don't know if you're following. I'm sure these are things that you already know, right?
Yes.
I'm sure these are things that we already know. Number two, materials mix now. This is where the issue is. So materials mix. So where the trick comes in, this materials mix. Remember, we've got opening inventory for raw materials. We've got purchases of raw materials, and then we've got also closing inventory, right? We have not been given the usage. We've only been given what we had at the beginning of the period, right? What we bought, and then what we had at the closing of the period. So we need now to find how much materials was used for X and for Y, right? That's where the trick comes in. So for X and for Y. So we need to first say, what was the opening inventory that we had, right? We had the opening inventory, quite all right, right? What were the purchases, right? What did you purchase, right? And then after we add what we purchased, and then we ask ourselves, what were the closing inventories? What did we have at the end of the period? So we deduct the closing inventory, like that, like that. And then we're going to have the amount of usage that we used for X and Y. So what was the opening inventory for X? Alex, you can help us with X. Peter, you can help us with Y. So the opening inventory is what?
So the opening inventory for X was 12,000.
12,000, right? And then what were the purchases?
The purchases were 63,000.
So we add what we purchased. This is the total inventory that we had. And then at the end of the period, what was remaining? What didn't we use, right? What we didn't use is what? 48,000, right?
Yes.
Right? And then we now find the usage. So the usage is just this amount for the opening inventory plus the purchases, right? And then minus the closing inventory, right? This mathematics I've done is not correct, is it? Okay, so this is supposed to be another plus. So that we have, yes. So Peter, help us with the figures for Y. What's the opening inventory for Y? Hello, Peter. Peter, can you help us? Okay, Alex, you can still give us. I think it seems like Peter is not active.
So the
Hello?
opening, okay.
Okay, I think yes, Peter, yes.
Sorry, I just saw you, it's having this training trick. Yeah,
Okay.
yeah.
All right. So help us with the opening inventory.
For Y,
Yes,
it was
for Y.
14,000.
Like that. And what were the purchases?
11 with 800.
So 112,800 like that. And then what was the closing inventory?
To the 80,400.
Like that. Then we're going to find the amount that was used. So this plus that, then minus that. Right? It's going to give us the usage. So this is the usage that we are looking for. Now we can also, have the luxury to find the total usage. So the total usage is just that amount plus that. Then it's going to give us the total usage like that. Right? And then this is the information that we need to use in order for us to find the material mix variance. So how do you find the material mix variance? Right? I don't know if anybody remembers the format.
Yes. Yes, it's the product.
So you've
Then
got
you
the,
put the
you've got the product there,
yes, you
right?
put the standard.
And then you've got the actual usage. So you can, it doesn't really matter whether you start with that or there, but just have to identify. So you can say actual usage in budgeted quantity, right?
Mm-hmm.
And then this one we can say the actual usage, or the opposite, doesn't really matter, like that. And then next we've got the variance, right? And then next
Yes.
we've got the cost per unit for each material, right? And then at the end of the day, we need to have the total variance in quarter, right? Like that. So this is our simple format. So what products do we have? So we've got X and Y, right? What is the actual usage for X, right? You can see here, material X, we're using 27,000. We paste it there. Material Y, we're using 46,000. 46,400. We copy that amount like that. We copy that amount, we paste it there. And then lastly, we also copy the total. Instead of us, calculating, just copy the total, right? Even the total, we paste it there like that. So this is our usage, right? So we know saying the actual usage in the budgeted quantity has to be the same as the actual usage, right? So we just copy and paste like that, right? Like that. And then now we start finding the actual usage in the budgeted quantity. I think I made a mistake. Just a minute. This is supposed to be not that. Because I was copying, I made a mistake. It's supposed to be this. This. Equal to this. What am I doing? So it's this plus that. This is supposed to be our total here, which is also supposed to be the same amount here. I think I just made an error, so it's just this plus that, like that. So this is the amount that we need to have here as well, right? So how do we find the actual usage in the budgeted mix? So what is the production mix for X and Y, right? How many kgs of X are supposed to be used to produce 1 unit of this product. So
10
now this
kg.
is where we go to the standard cost card. Hello?
Yes, 10 kg.
So it's 10 kg, right? So we say 10 kg here. What is the total amount of kgs that are required?
18 kg.
18 kgs. Then for y, how many kgs? No, I'm total. So the
It's
total
28 kgs.
28 kgs, right? Wait, so 28, right? So meaning for y, it's 18, right? So
Yes.
18 over 28. And now this is the information that we use to compute the actual usage in the budgeted quantity, right? So we just say 10, right, divided by 28. Then what do you multiply this? You multiply this by 73,400 like that. And then also